This is brought to you by John Daniel and Partners, LLP.
Going online, entertainment industry, people are complaining the other day about young people. They go to the entertainment industry, they go online, they prepare music, they are earning from social media platforms. Of course, they are earning. That's income. And because it's income, why not for them to pay taxes? Just like a guy who works for the government or works for a certain company and goes to work every day, because he's getting a salary, and this musician or this entertainer is also getting income. So there's no harm in diversification, because with diversification, it means everybody contributes, in my view, to the economy. We'll also expect incentives for voluntary compliance. And I'll put voluntary compliance in brackets there, because we'll get to situations where you find yourself going to the government office. And I think we are already there, where you don't get summoned to the office. You just find yourself going there because you received an alert, or you want to do something, and then you are told you have to do this first as far as tax compliance is concerned. If, for example, you want a tender in government, you are forced to comply, to have a tax compliance certificate. So you find yourself, not because you are going to pay any taxes, but because you want to pursue a certain business opportunity, then it follows that you need to kind of interact with the tax authority. So having said that, it's good to now ask ourselves how we can be able to plan as far as taxes are concerned. If those are the things that are happening, how can we best plan? First, let's understand tax planning. Tax planning is basically organization of our business affairs to minimize tax liability. It's not running away from the law. It's just arranging our business affairs. In Kiswahili, kujipanga. And kujipanga not in a way that you want to break the law, but you want your business affairs to take advantage of the current tax arrangements by the government. So tax planning starts first in understanding your business model. Who are you? When I ask you who are you, it doesn't mean just you say, my name is Dan. It's not just about that. It is, you are running a business, but exactly what are you doing? Exactly what are you doing? Some businesses, the traditional businesses, are simple. A shop, for example. A shop where you are buying from a wholesaler, and therefore you are a retailer, you are selling to customers. So you are buying items, physical items, and you are stocking them, and then as the customers come in, you are selling to them. That's a very clear model. But in some cases, the business model is not very clear. In some cases, the business model is not very clear. A good example is when you have, what we call the new economy. If you are running a business, you are getting goods, and you are, let's first say you have a platform, an online platform, and you are displaying goods, what you are selling, but you are not stocking them. I'm trying to relate this now with a shop. You are not stocking them. That means you don't have the physical items. But the moment you have a customer order, that's when now, based on the supplier arrangements or partner arrangements that you have, you can now rush and get that item and deliver to the customer. This delivery, you are even using delivery companies like Uber and all that. So you are not even touching the item yourself. You as the one running the platform. But remember, you are the face, you are the one who has advertised. So here, we need to understand what we call the tax points. We need to understand the tax points. I'm just explaining that as a model. I'm not saying it's a bad model. It's a good model, and all models will be good depending on what you want. But then you need to ask yourself, what kind of business model are you having? And appreciate the applicable taxes. When you say who are you, we mean not just you as a natural person, but you also mean in terms of legal identity. Are you a company? Are you a sole proprietor? Are you a cooperative? There are some, you could even be registered as a society. When you call something a chama, what does that mean? We are together with so and so in a business. Tumeshirikiana na my friend, we are doing something. Legally, who are you? A good example is if you join a friend, like the young people who leave college, because you've left college and your friend is already running a certain business, and then you join that friend of yours. That's good. You are close to your friend and you can team up, you can put ideas together. You can even contribute some money, whatever little you have, so that you run the business together. But since your friend was already running the business, probably that friend had already registered a business. So when you join in, you are joining as who? You are joining as who? Are you a partner? Are you a co-director in a company? Or are you just there informally, yet legally you are not known? Those are some of the dynamics that I'm saying you need to really understand when you are talking of tax planning first. So here we are saying you need to undertake certain activities to reduce the tax burden legally. You take advantage of what is available. You take advantage of what is available. The tax exemptions. If there are certain exemptions that have been provided in law, and the main tax laws are income tax law, VAT law, and all that. If they have provided for certain exemptions, you need to know about them. You need to take advantage of them. If the law allows you to exclude some things, to deduct some things, the government made that deliberate, made that decision deliberate. So can you be able to take advantage of any of them? So you must have known exactly what you are doing, your kind of business, then you take advantage of the available incentives. There is a common term people usually say: tax avoidance, tax evasion. Tax evasion is illegal. Tax avoidance is legal. That's okay, and it makes sense. But then, when we say tax evasion is illegal, it means you are breaking the law. You are breaking certain provisions of the law. But tax avoidance is where you have designed your business in a certain way that you avoid. And I usually encourage people not to take very seriously that statement, because it doesn't tell much. It doesn't tell much if you think about it. If, for example, I don't do import business, it means I'm avoiding taxes related to imports. So there's tax avoidance there. But that's not a very good thing if I wanted to do import business. It's not a very good thing. You can only benefit after you know your business. You know your business, and therefore you go hunting for the benefits that are available. What can benefit you? So tax planning requires a deeper understanding of the tax legislation. What does the law provide? What does the law say? And besides the law, there are those decisions that have been made by the courts, that have been made by the tax tribunal, which have built on what we call the tax or the case law. If you have interacted with the, for example, newspapers, we report the decision of a certain court. Like this week, I've seen a case where somebody had sold. I think they bought some land in Kiambu somewhere, and KRA came for tax. I can't remember the specific details, but basically the person was not very happy, and they decided to take KRA to court. So the court looked at the case, and they decided in favor of the government, in favor of KRA. Now that's a precedent that has been set in that area. So it is for you now to ensure that you have a good understanding, and that understanding is helpful to your kind of business. Don't just assume that whatever has been decided in newspapers, and nowadays in social media, they give a lot. Look at yourself as a business person and know that your business is unique. And it's unique because your identity, you as a person, and the kind of income that you have. And that's why you need to consider talking to professionals, tax professionals, people who understand the tax issues at hand, and who can help you specifically based on the problems that you may be experiencing. What are the benefits of tax planning? So you minimize tax liabilities, and this is legally. Because of the law, you have not broken the law. You have just ensured that all your liability is minimal. It is to your benefit. And then you avoid the penalties that come, or fines, legal matters where you can even be charged before a court of law. You don't want that. So because of tax planning, you can avoid those penalties. Again, because of tax planning, you know the obligations. For example, you know the dates when you're supposed to pay certain taxes. So you expect your cash flow, you need to plan your cash flow. If on the 9th you are expected to pay as you earn, or on the 20th you are expected to pay VAT, then it follows that you must ensure you have the right cash. So, and remember, you're running a business. You didn't open your business to pay taxes. That is something I usually emphasize. you opened your business so that it can help you, it can help the community, it can employ people, it can provide services, it can sell goods. And because of all that, the tax element is a consequence. It's a consequence of what you planned. So the first objective of starting a business was not for you to pay taxes. So you should be able to run your business smoothly in a way that you are happy yourself. But because there are also consequent obligations, then you ensure that you meet those obligations. And there are certain incentives that are available. Incentives are all over in the tax laws. Of course, the government put those incentives because it wants to steer, the economy in certain directions. For example, if the government wants affordable housing to work, it will put in an incentive. If the government wants people to contribute to retirement, to old age, it will also put in an incentive. So the government is looking at the country collectively, everybody, the citizenry collectively. But what about your business? And of course, other benefit is to enhance growth and expansion. Because of your planning abilities, because of planning properly, then in the long term, you're able to know the benefits that come with even financing that business. Decisions like whether you need to get a loan or not, whether you need to use your own money or whether you need to borrow. If you need 5 million, 10 million into your business, how do you plan for that? Those decisions can be impacted by your tax planning. So it's important that you ensure that you have right planning. And when you say startups, or when you talk of startups, what are these unique characteristics that touch on startups? These unique characteristics, they bring, startups have the uniqueness of, their new ideas, new locations, new technologies, like the ones I was explaining, new business models, a way of doing things that was not happening before. Or even if it was happening, probably it's in a new locality. And they're actually characterized by having little capital. You are starting up, you are just starting small. What we call side hustles in the Kenyan environment, or dual-carry. So we are also facing a kind of an uncertain future in terms of our cash flows. So those are typical business, small businesses, startups. It's lean on structure. Because you cannot employ many people, you only have yourself to work. So you don't have enough people, but there's so much to be done, so many things. You still have to serve customers. You need to go to a government office. So do you first close the office? Do you send your wife or your younger brother, or do you send a friend? Do you close the business and go look for, do a market survey in a certain locality? Those are the challenges. And of course, they are related to lean, being lean in terms of the capital issues, because you cannot be able to employ many people. Then there is a focus on selling. You are focusing, because you started a business, your aim is to sell as much as possible. You want to get money. That's why you started a business. To provide services. so that people pay you. So you are on a day-to-day basis, waking up every morning and you are looking, where do I go to sell? How do I get more customers? How do the customers pay me? I delivered some goods. Can I chase, collect? So there's a lot of focus on selling. And it's very easy that we neglect other very important matters like tax compliance. And this is where we go wrong. And business people, in my experience in running a business, as much as I've gone to school about business and I know about business, in practice, this is an area that is very challenging when you are running a business. You want to focus on selling, but at the same time, you need to invest in training, for example, staff training. Staff training will cost money. You want to send a member of your team for a training, it costs money. That member of staff will not be working on that day that you are training them. So how do you ensure that you recover the money that you have that you have spent on the training? Or you want to comply with the taxes and you want to pay a tax expert to structure your way of working. You'll have to pay the tax expert. And so you have to, these things you push them to the back. And they become the kind of things we talk of, I'll do them someday, which we have not specified, kind of. And cumulatively, that accumulates to be a problem. They accumulate to be problems, and you can understand why, because the first place you are looking for money. So the priority is never to invest in those things. But these are the things that those who have heard of that book called 7 Habits of Highly Effective People. The Steve Covey talks of things that are they're important but not urgent. Important but not urgent. So they are important, so you need to invest in them. He talks of a quadrant where you avoid firefighting element. Firefighting is when you are doing only that which is very important and very urgent. Very important and very urgent. But if you had invested time in what is important but not urgent, then you will make your future easier and easier as you go along. And this is very important for business startups, and not just on matters of tax compliance, even in terms of building skills, even how to run a business, how to know about your business, doing research about your business, planning for your business, 1, 2, 3 years, taking time off, for example, a whole day to plan about your business. And you move away from the urgent and important, the firefighting part. And firefighting in terms of taxes will come when the tax money is at your door and is telling you must come to KRA office, to the nearest KRA office. You've been summoned. Now you've been summoned, it means now you have to spend a day there or some hours at least there to address a tax issue. If you had looked at it in good time, you probably will not have to waste a day or even 2 days. You probably will not pay fines, penalties. You probably will not have your bank account frozen. Those are the challenges that come with the startup. So ensure that you don't neglect compliance matters. And therefore, learning becomes an ongoing thing. And of course, we usually say with a there's one guy who defined a startup. I can't recall his name, but he defines a startup as a business organization that is trying to come up with a business model. So it's not very clear how you are going to work. It's not very clear how you are going to run your business. So it's like you're experimenting here and there. What is working? What is not working? And whatever is not working, then you leave it. So planning is important. Let's get to the tax strategies. And as I said, it's important that you keep the chat area active, questions, so that we have a session to address some of the questions, comments, give your comments, and so that we can be able to discuss them towards the end of this webinar. And we be able to learn together and your experiences, areas that you feel are challenging, and what you have learned. Even what you've learned will also be important because if you share what you have learned with others, we are told we grow by sharing. We grow by sharing with others. If you have run your business for some years and you have learned one or two things the hard way, you not want your friend or those people who are in the webinar today to go through the difficult experience you went through. So how can you be able to help? Put that in the chat area, just give you an experience. You don't even have to be specific if there are issues that you feel are confidential. You can just give the general problems, and I'm sure that will be able to help somebody. And we will also provide materials for our discussion towards the end of the webinar. So tax planning strategies. Here are the grouping of what I would categorize as grouping. So first, know your relevant tax obligations. And doing tax obligations is very important because taxes in Kenya and probably in very many countries, taxes are based on, first, who are you? First, who are you? Second, what is your type of income? What is your type of taxable income? What is your type of business? What is this that would be taxed? That's very important. So I want us to discuss each of these items individually. So the other strategy is timely filing and payment of taxes. Then proper accounting, proper bookkeeping, maintaining proper books of accounts, and taking advantage of the available incentives. So let's just dive in and look at these things individually. So the business structure is your definition of or what comes out as the first thing you need to know about yourself. Tax obligation. Are you a sole proprietor? Yes. Sole proprietor is what we call a business name. You register the business name, done trading as, you go to eCitizen, you are sole proprietor, you are alone, and you are a business person. And legally, there is a lot we can talk about that because it means legally you and the business are one and the same. And therefore, what will be taxed, the way you'll be taxed as you and your business is combined because legally you are the same. You are the same as your business. Whether to be a sole proprietor or a company, it doesn't mean that a sole proprietor is bad or a company is bad. You just need to look at what you are doing, probably get some advice before you start. How do I go about it? And these are the areas that you are told about formalizing a business. Because many people, when you start, you first start by putting in where will I do the business? Will I open a website? Do I open a social media account, a social media page? I promote it. People send me money through M-Pesa. So you can run for some time without formalizing the business, but you ultimately need to register the business. So you're registering as a sole proprietor or as a company. A company is limited, and there is a law called the Companies Act. It's an old law, but it was updated. I can't remember. I think it's 2015. I think it was updated. Previously, it used to be Chapter 486 of the laws of Kenya, but it's based on the old corporate law approach. The British were very good in coming up with the corporate law, and even currently, the global arrangement of things, you'll find the British have an advantage here and there. That's why you have, cities like London have being the center of finance in very many aspects, even in Europe, as much as they are not in the European Union. Or you'll find their influence all over in the US, in Canada, all over. So corporate law is what the principles of corporate governance, where you have the owners are separate from the entity they have created. And that's why we'll say it's an artificial person, somebody who has been created by law, is a legal person. And this will be taxed at the corporate rate. That's for income tax purposes. You'll be taxed as a company, and then the owners, when they get dividends, they'll also be taxed. So you may be alone. Nowadays, you can even form a company alone as an individual. So you can have the same business, the same name, the face, the way people look at it is the same, but underlying that business, it could be a sole proprietor, but it can also be a company. Then a partnership where you are joining together. You are joining together with a friend, with a relative, you are becoming partners. For certain types of businesses, like professional practice, a partnership is common. For example, in our field, CPAs, we usually practice as partners. We practice as partners, and we are licensed individually, and legally we cannot practice as companies. So again, those are legal limitations, but you can also be in a partnership and running any other type of business. So each partner is taxed based on their, as their personal income. For each partner, they are still separate people. And nowadays, you go to the details, you'll find there are limited liability partnerships, and there are details that go into that. Then we have NGOs and other charitable organizations. Now, this is an interesting area, and nowadays we have the new act, or an act called the Public Benefit Organization Act. It's not really it's really not a very new tax, but it is a tax that was passed quite some time back, and then it took long for it to be operationalized until last year in May, when it was operationalized, and all NGOs or organizations that carry their business activities as NGOs are required now to register under it. And this is a whole area, it's a big area. I cannot get into the details of that. But if you're in the NGO world, it will be very important for us to have a conversation with you. You need to ask yourself, are you compliant with the Public Benefit Organization Act? After it was operationalized in May last year, I think they gave 12 months, which will be ending in May this year. That means just about a month or two. So you need to ask yourself, were there things that you ought to have done if you registered as an NGO, a society, a community-based organization, company limited by a guarantee, and you are doing business that can be called an NGO, or you are presenting yourself as an NGO. Then you need to know about certain arrangements in government where if your turnover, if your annual revenue in 1 year is between 1 and 25 million, you're also eligible for what is called turnover tax at the rate of 1.5%. Now, turnover tax is just looking at how much you have sold in total, and the government tax is that. The history of this is because the government was trying to simplify tax, because there used to be complaints, or even today there are complaints about a complex tax structure. And because of a complex tax structure, then the government tried to come up with an innovative way. How successful it has been, I'm not sure. I can say, I don't know. But basically, it's simple. Simple, in my view, it's simple. Just look at how much you have sold, 1.5% of that, then you pay that. There are also limitations, there are details about it. And you can also ask yourself whether it's for your benefit, and especially because certain types of businesses, especially businesses which have huge turnovers but very low margins, it's not an advantage to them. I'm thinking of businesses like where you sell so many units but very small margins. So you need to look at whether it's an advantage to you. And then, of course, you remember you're supposed to register for VAT. Registration for VAT is based on your turnover. So if you're selling items that are subject to VAT, the tax law, the VAT law, VAT Act 2013 talks of taxable supplies. So if you are dealing with the taxable supplies and your turnover is about 5 million, then it also means you register for VAT. Know the kind of business again. You are manufacturing. If you are a manufacturer, you need to pay excise duty. And also there are also legal requirements in terms of you need to go through an approval process by the Kenya Bureau of Standards. Why? Because for you to manufacture, you need to meet certain standards, and then there'll be excise duties. If you're importing, import taxes, and importation is a whole, it's another subject we can discuss for a long time. But the beauty is there are laws, there are clear guidelines, and you need to know about them. So the moment you know about them, you can be guided. Professionals like ourselves, we can be able to guide you what you can do depending on what you are planning to do or you are currently doing. Professional service firms, professional service businesses, lawyers, accountants, doctors. You are a surveyor, an architect, an engineer practicing. So remember about withholding taxes. And then if you are landlord, if you have rental income, then you pay monthly rental income at the rate of 7.5%. Nowadays, the government has been very aggressive on this. And you also need to know there are options. You can also choose not to pay monthly income tax, but you have to be deliberate about it. You have to get approval. so that you file under the normal income tax arrangement. If you are in employment, know about the pay as you earn, affordable health levy, the NITA requirements. Are you an independent? If you are in business, I've seen clients who have said, no, I don't want to employ anybody. I just want people to be under withholding. I want even to change my employees from employees to consultants. Those are decisions that you need to know what is involved. If we go further, there are even businesses that are in what we are calling special economic zones. Globally, this is a kind of a way of trying to attract businesses because the big capital globally is very mobile. People with billions of dollars or millions of dollars at least, they have options. They can invest in one country or the other. They always compare here and there. So in our case, in Kenya, we are trying to attract them through special economic zones. Some areas have been declared special economic zones. Tatu City is an example of it. There has been a government plan to establish Dogo Kudu, Naivasha, but I think those are just plans. Konza, I know, is a special economic zone, and there are several others. So if you're investing there, know what it means. Then you have the old export processing zones, like the Athi River, in Athi River. I mean, and even Mombasa, there are some special economic zones. Even Waraka, there is an EPZ. So if you're investing in the EPZ, what does it mean? So the first thing, as I had said before, is knowing exactly what business are you in. Can you be able to really explain the kind of model you have, and therefore ask what kind of taxes you are eligible to pay. The other strategy is timely filing and payment of taxes. You file your taxes and you pay them on time. Within 5 working days after payment or deduction, withholding taxes and excise duty. So you have paid somebody like a consultant. So if you are paid, then within 5 days you make the declaration and you pay. If there is monthly income, for example, for your employees, it means by the 9th of the following month, you pay taxes, pay as you earn. These are statutory taxes that are related to the payroll. Again, it's very important. It relates to how you are managing your payroll. Do you have a payroll way? Do you have a system? Do you have somebody doing those calculations? What are the tax rates applicable? Nowadays, the beauty is with the software, it's very easy to do this. By the 20th of the installment taxes, you are supposed to pay the income tax in installments. If you're a business, a company, for example, and you're running whatever kind of business, so you're supposed to pay tax at 30% of your taxable income. This 30%, the government does not want to wait until the end of the year for you to give it. So you need to pay in bits, and that's what is called installment taxes. It's not a new tax or a different tax from income tax at the business level. It's just that it is paid in installments and it's income tax. So you pay on the 4th month, on the 6th month, 9th month, 12th month. And then by the 30th of April, for example, if you are following the calendar year, you are expected to clear whatever is outstanding. Then 20th of the following month, remember VAT. VAT is a major thing. Monthly rental income, excise duty, turnover tax. The turnover tax that I said at 1.5%, you need to pay it by the 20th of the following month. Then there is also the annual inspection, public vehicles, commercial vehicles. If you have a pickup, if you have a truck, you pay advance tax. Advance tax, again, is a form of income tax. It's only that you are paying in advance. And it's also tied administratively. It's tied to NTSA, not because NTSA is a tax collector, but because of administration matters. When you are getting the license, then they need you to have cleared in terms of advance tax. The other strategy is ensuring proper books of accounts are maintained. You need to seek professional advice. Get professional advice. Get to structure your books properly. Get to arrange. These are the things I was saying fall under important but not urgent arrangement. You have things to do, you have to run, you have to sell, but how are you invoicing? How are you communicating to your customers that you need to be paid this much? Are you going to MS Word typing, or are you using an old receipt book and you put a carbon paper and you handwrite? Suppose you are to do it with a software where you can even do with your phone. It's available now. So itemize, and because of the professional advice, you can be guided on items that can be, what can fall under allowable, what is deductible, So, and the filing arrangements that can be done, through ETIMS, ensuring that you have compliant invoices. People who are invoicing you, they all give ETIMS. Take advantage of incentives. Incentives like the tax amnesty. We now have a tax amnesty. It was supposed to end last year, June, but it was extended to this year, June. Take advantage of it so that you avoid the fines, the penalties, and interest. Capital allowances. The Income Tax Act provides for income tax allowances, like wear and tear, investment deductions, certain allowances based on how much you have invested, based on the industry, based on where you have invested. There are certain deductions. In other words, the government is telling you, you have invested a lot of millions. So before we start demanding taxes, here are the issues that can be of importance. You can first recover your investment. You choose the right business structure, whether you are going to be a sole proprietor, whether you are going to be a company. What is the extent of your personal liability? How will you be filing? And all this, of course, will help you to even take advantage of the arrangements that are already there. And the government is, because it wants you to go to a certain direction, it gives an incentive. And as an example, as I said, is pension. The government wants you to contribute towards old age, because when you are old and you are not productive, you need to have a source of income. It's a good thing for your personal, in your life. But many people will not want to bother with that because they are, we want first to, nakura leo, tomorrow you don't want to worry about. So because the government has put in an incentive there, why not take advantage of it? Why don't you contribute more to the pension, so that because of the pension, then there is some deduction on what you can pay. Good. As I conclude this session, you need to understand your tax obligations, and understanding tax obligations, as I said, is asking yourself, who am I? Said, who am I is not just the name of who you are. I come from this. Who you are is the legal status. How does KRA know you? How does the government know you? You have registered as a sole proprietor, as a company, whatever. That's very important. And what business are you in? I am importing, I'm manufacturing, I'm buying and selling, I'm in online business. You need to know what business are you in, or what kind of business model you are in. You lay a strong foundation, and this strong foundation is basically what I'm emphasizing is important but not urgent. You invest in what will create a good foundation for your business. You are kind of laying the steps, and if I may give the analogy of a 10-story building, you need a strong foundation. Because of that strong foundation, then on it you can be able to put the next story and the next story. The old quote that there is nothing as certain as taxes is with us every day. We can't run away. There's the need to ensure we befriend the taxman. Of course, not literally. We are basically saying you need to know that you cannot hide from the taxman. The government knows about you, and it's very important we remember that it's psychological. You can limit your potential as a business person by running away from the government. Yet you can achieve much more if you are compliant, and therefore you are able to pursue your business objectives without being harassed. So I think I will end at this point and take it back to Mercy, so that Mercy can be able to guide if there are questions that we can address. I can see already there are so many comments. I hope my team has been able to go through them and can be able to explain or probably guide further. So Mercy, kindly take up.
Wow, thank you very much, Dan. That was a very informative session. I want to believe all of us have taken home something. Personally, I learned that the key to managing or having a strategy in my business in terms of taxes is to first understand my tax obligation. So I want to believe everybody has taken home something. You can maybe put down on the chat section what your key take home is as we wind up, and also as I try to look if there is any question that has not been answered. Thank you very much for those that have been putting comments on the comment section. It means that the topic is quite interactive. It's something that is involving all of us when we see these questions. So I can see John has been answering these questions. John is one of us. So I want us to see if there is a question that has not been answered. There is one that I had observed earlier, but I can see John has answered. What is involved for a community-based organization in line of taxation? Yes, thank you so much for all of us. I am just trying to see if there is a question that has not been answered. If you feel that your question has not been answered or it's not very clear, you can put the comment on the chat box, or you can raise your hand. I'll be able to see that and allow you to speak. Meanwhile, we can be putting down what we've taken home from the presentation, and if we have a question, we'll be happy to answer. Thank you very much. I can see all questions have been answered. Thank you very much, Dan. As we conclude, I would like to invite Frida, who will give us a brief of who John Daniel and Partners are, and also help us to understand how we can be of help to you as a startup. Welcome, Frida.
Thank you, Mercy, for the opportunity. My name is Frida Babu. I'm part of the team of John Daniel and Partners LLP. We were happy to have you in our today's webinar. Thank you so much for plugging in and learning. We are hoping that you found the session informative. I work in the marketing department. So we are John Daniel and Partners LLP. We are certified public accountants. And some of the services that we offer are bookkeeping and accounting, both internal and external auditing services. We also do management advisory and tax consultancy. So you can contact us for more details. As business owners, it is good to allow consultants or professionals to help you in such issues or tax matters so that you can concentrate on managing your business. So it is good if you contact us. We will be happy to help address any tax issues that you might be having as a startup or a business. We also have we are Zero partners and certified advisors. Zero is a cloud-based accounting software that we use to do your accounting. So you can contact us, we will onboard you and help you to do your accounting. With that, I'll take it back to Mercy to allow Dan to give us the parting shot. We are based in Nana House, third floor, room 305. Nana House is in Kimathi Street, just directly opposite Nation Center. So that's where you will find us. And maybe I can mention some of the clients that we have served in the recent past. We have served clients who are in the real estate sector. We have also served clients in the, and also organizations. Libra is in the finance sector. And also we have served the government, some businesses that are involved with the government. So feel free to contact us. We have a team of professionals who will guide you.
And also our phone number. Yeah, we'll be happy to get back to you and solve the problems that you may have. I can see from the chat box that Christine is saying that thank you very, very much for this webinar. It was very informative. Asanteni. Karibu sana Jambi. Simon is saying, could you share the slides with us? Yes, we'll be sharing the slides after this. Yes, I can see Stephen has said that I have taken that I need to know who I am. Yeah, you need really to know what business you are in and the tax obligations that go with your kind of business. Thank you very much for joining us today. These are webinars that we conduct every month towards the end of the month. So you can keep looking to in our website, not really website, but social media platforms, so that you see what topic we'll be discussing in the next webinar and the dates. You can also come with your friend who is in business or who is in a startup. I would want to take this opportunity to welcome Dan again to give his final parting shot. Thank you, Dan.
Thank you, Mercy, and thank you, Frida, before that. So thank you, our participants, for those who are the webinar. We've seen your comments. I appreciate your input, and if you have learned something, we really appreciate that. And please share with a friend. Please ensure that you can be able to add value to to others. As I said, we grow by sharing. We give, therefore we get. It's usually an important approach to think about. My parting shot is I had projected at some point, but is a quote by a gentleman called Carl Jung, and is somebody you can Google. Is also a psychiatrist and a psychologist. And it's a famous quote that says, "The world will ask you who you are. And if you don't know, the world will tell you." The world will ask you who you are. And if you do not know, the world will tell you. So it's something to reflect on. Who are you in terms of business? Probably even in our personal lives, it extends to that. Who are you? And if, of course, if you don't know, the world tells you a lot. I would not want to be in the category of the world telling me who I am. So defining your identity is the first thing. As I said, in business, and therefore you can know how to interact with the government, with your business partners, with your customers, so that it can make easier for you to run the business. So have a good time. Thank you very much for participating in our today's webinar. Thank you. Mercy.
Thank you, Dan. And thank you, everybody, for joining today's webinar. I want to believe I'll be able to see you next month in our next webinar. Yes, thank you very much and have a good day. I wish you all the best in your businesses.
This is brought to you by John Daniel and Partners, LLP.